Okay guys, Saturday the 10th of March. So as always, we're going to have a look at the E-Mini S&P500 and NASDAQ. We'll go through the markets from last week in relation to our Sunday analysis, and then we'll go through the markets for the trading week ahead. We'll identify our key zones for day trading, and I'll take you through basically how I'm going to be watching them. So before we get started, first of all, I hope you all had a good trading week last week. The markets were making some pretty nice movements. So starting on the S&P 500, what we went over last week was how we were testing down at this previous swing point. Now it hadn't given us the confirmation of the break as yet, but because it had came down and tested below that level, we were being a little bit cautious coming into the trading week ahead. We didn't just want to instantly go bullish. We wanted to wait until we started to see breaks above key zones. So key zone down below was at 2673 for support. Market came down, tested on the Monday, very strong move up on the market. Then we had 2743. This was a key resistance level, and what we went over was how if we broke up above this zone, we could then start to look for the moves up into that 2755 level. So on the Tuesday, very strong rejection coming off of that zone all the way back down. On the Wednesday, straight back up, where to test at that resistance level. Then we started to break up above on the Friday. Now a lot of this was to do with non-farm payroll. When the figures were released, the market put in a huge bullish rally, and then it just continued drifting up for the rest of the day. And then when we broke up above this level, we went over how it was very likely we were coming up to test at the previous highs. Okay, so for the trading week ahead, actually what I'm first going to do, I'm going to drop down onto the 5-minute time frame, because what I want to go over is from the Friday, we were looking at, with subscribers, I was looking at a potential price squeeze to give us a little bit of evidence of how the market was going to break, if it was going to break to the bullish side or to the bearish side. So if we go on to the 5 minutes, so I've actually already got one of the segments right there. Let's make it a little bit bigger. We also had one down here, run about like this. What we're looking at was how the market had tested, and then coming into that trading day, it was testing once again. We also had the upper band, which was testing. And what we're looking at was the market following a trend line and also starting to squeeze. So we were looking at the potential for some sort of a breakout. Now, this is before the market opens. This is the non-farm payroll release. What we're also looking at was potentially, as I always go over with patterns, a false break. Market starts to break down from the trend line. It's breaking down from the trend line. What are the majority of traders now doing? They're getting short. As you know, the market does this on purpose. It's pulling people into short positions. It's giving the false break. Then we see the market hold, non-farm payroll release, we rocket up out of this. That's the proper, or the real break of the price squeeze, and the market then continued for the rest of the day in a very strong bullish movement. Okay, so back on to the daily time frame. So what you can see is basically what we're doing is, when I'm trading, daily time frame, this is where the key levels come from, and then what happens is day to day, I do further analysis on the market depending on what it's done the day before, and for the week that's already preceded. And then on the 5-minute time frame, I'm looking for it's almost like micro evidence. So what's going on in the micro picture, and things like price squeezes, things like double tops, triangles, etc. All of those things show up very well on the lower time frames. And if you can start to add it in with your daily time frame analysis, it becomes very useful. So the market is testing at previous highs. Very strong move up, but it's on the back of news also. So we want to be a little bit careful. We're coming into these previous highs here. We've also got our trend line. We tested, and then the market broke through. So the market is now pressing back up to test at this level. So first thing is, it's worthwhile watching up here. Let me get rid of this zone up here because we're going to adjust it. Let's get rid of this. The other zones are pretty much staying the same. You can actually see on this Thursday, we broke up and rejected at this level, came back down, and then we found the bounce. So I'm still happy with this zone sitting right here. I'm happy with the zone up above also. key resistance now is this whole area up here at 2812, really down to, really it's the round number. Let's just take it down to 28,000. Right here. Yeah, we've got the round number. We've also got previous levels of structure. This was a little price squeeze. See the market pressing up, squeezing, and then breaking out. We've got the previous squeeze, we've got the trend line, we've got the round number. 3 levels of confluence. So if the market comes up here, especially if it comes up and starts testing at the trend line at the same time, really good level of potential resistance. We can actually make another one just up above. Really, let's have a look. 2830 down into 2825 right here. And we've also got one sitting just up above there at around about 2843 down into 2840 right here. This whole section up above is good resistance coming into next week. And as I mentioned already, especially if we're testing out the trend line, it's worthwhile looking for those potential bearish setups during the trading day. Now, let me get rid of this. Also at these previous highs. So 2790 down to 2785. And what we're doing is we're just adjusting it ever so slightly from last week. We're taking into account the close here from last week, but we've now had confirmation of 1, 2, and on Friday we closed and saw a little bit of rejection coming in from this level. So it's a good area of potential resistance. Now, if we're starting to break up above this level, get rid of this arrow if we can, it's also a good level of support. And really, if we're breaking up above this level, you'd expect to see the bears stepping back in and forcing the market back up at least to this 2800 level, the round number. And then we start looking for that potential resistance. Also, if coming into next week, we are testing at these resistance levels and we start to break through the trend line, we can then start looking for the bullish bounces from these levels, especially if it's lining up with the trend line. And really, for each of these zones, I'd be happy to say if we're breaking up above, as long as the trend line's not in the way, we could expect the move up into the next zone. And we've got another one, may as well put it in at around about 2855 down to 2850. Right here. Now, if we start getting up above that level, it's very likely we're coming back up to all-time highs. So down below, our zones, as I've mentioned, are the same. We can maybe bring this one up ever so slightly. So 2755, 2761. Just bring it up toward 2765. Right here. If we see pullbacks, good level for looking for potential support. If we're breaking back down below this level, it's then giving us a clue that potentially this upward surge is, at least in the short term, failing. We can look for the moves down into the next zone at 2742 to 2730. And really back down here is when we start getting back into key support. So if we see the pullbacks, the retracements, whatever you want to call it, this is really the key level. This one and this one right here at 2722, 2712. To look for that bullish continuation once again. And then down below there, we have our key zones 2702, 2687, 2673 to 2665. As we come down, also worthwhile watching as support. But the key levels now are up above at this whole section, lining up with that trend line. If we're breaking through the trend line, as I've mentioned, those bullish bounces for continuation. Coming into next week, this level is resistance, especially if we're still holding at this level. If we start to break up above, it's worthwhile looking for the bounce into the zone up above. Potential support 2765, more minor for me. If we're breaking down below, it's worthwhile looking for the bearish movements back down. And then really this zone right here and this zone right here are very key support in the market, looking for potential bullish continuation. Okay guys, so that's everything for the S&P. Let's move on to the NASDAQ. Okay guys, let's do the exact same thing for the NASDAQ. So with this market, last week, what we're looking at were two zones right here, 6792 and 68 6815, 6823, 6856. Then we had 6880 to 6902, 6910 to 6930. With these zones, we had resistance and we had support. Now, coming into Monday, we made a breakdown, tested at our zone, just up above actually, 6736, 6717. Very strong bullish movement. We then tested at our 880 resistance level on the Tuesday. We broke up, tested 6930, 6910, had a move down. On Wednesday, again, tested at support, 6815, 6792. Very strong move up, back into this zone right here. And then we started to break up above. So, last week, all I really did with subscribers when the market was sitting, so basically Monday, Tuesday, Wednesday, we just looked at the market as though it was in a range between these two levels. Comes up, look for resistance, comes down, look for support. And then started to break up above this level, more bullish, looking for, as we went over last week, just want to double check. Yep, as we went over last week, break up above this level, start to look for the moves up to where? Our next zone. So we start to break up above, move up. If we start to break up above this level, very close to the all-time highs in the market, huge bullish movement again, a lot of it down to non-farm payroll, which was on Friday at 1:30 in the UK. Okay, so coming into next week, what we're looking at? Well, the market is all-time highs, very nice, strong bullish movement. I think it's a little bit smaller. Really, we're starting to make a little bit of a trend line now. Around about here, tested once, twice, 3 times, 4 times, and we're continuing on. So, first of all, I want to keep that on our radar moving forward now. The zones, let's have a little bit of a look here. So this one is still pretty good, 7,005. We could bring it down ever so slightly to 6,966. Now the reason for that is, you know, on the Friday we had a little spike down, testing at the level and confirming a potential area of support. We also have the all-time highs, 7,038. Don't want to make it too big a zone really here, 7,033. We don't have a lot of price action evidence. Down below there, we've got 6,930. We're going to move it up ever so slightly to 6,935, 6,940. That comes down to, let's make it a little bit bigger so you guys can hopefully see. So 6,940 down to 6,910. Still a very good zone. Down below there, 6,902 to 6,880. And then down below there, really this one is more minor. So 6,856, 6,823. We'll mark that in with a little arrow. Just as a reminder that this is a more minor zone. 6,815, 6,792. Very key. I'm not going to look all the way down here. It's very unlikely we're going to see the market crashing back down. It may happen. I'm not saying it's not going to happen. But it's unlikely now. So, coming into next week, what are we looking at? Let's just put this rectangle back in here. Very, very strong bullish movement. Up above, well, we're testing at 7,100, the round number. So we can look potentially up here, really 6,110 to 15. We don't want to go too much higher. Down to around about 7,095. We're just using the round number, 7,100 as our clue. So minor, very minor level until we get evidence. Potential resistance. But really what we're looking for is some sort of a pullback on this market. We've had a very, very strong leg up. Most of it driven by that Friday level. What I'm just quickly going to do is throw the Fibonacci on this at present. Okay, so lining up pretty well with our zones, to be honest. 50% is a little bit down below, and this is if we don't create new highs. I'm just looking at it at present. I think it was a couple more clues. Let's try and get rid of it now. There we go. Okay, so coming into next week, pullbacks at our levels to look for potential bullish bounces, 1 and 2. For me, key levels start back down at really 6,900, down to 6,880, down here. We also have that level up above, 6,940, 6,910, still worthwhile watching, but for me, this is really the key levels of support. And then down below there, key levels also, especially at 6.815 to 6.792. But any of these zones on the way back down, we can look for potential support. Now, for selling this market, really, if we're breaking down below 6.966, I want to keep this trend line in mind as well. Basically, if you just look at your charts, the spike down from Thursday the 1st, Monday the 5th, and Wednesday the 7th, if you line all those up, you'll get the trend line level. If we start breaking back down below this one, and we're not hitting straight into the trend line, I would then expect the move down to 6.940. And then really, it's only if we start breaking down below 6.880 that I would then start to look for the move back down into our more minor zone at 6.855 and potentially 6.815. To turn more bearish, the market really needs to come down below 6.800 now. That's to turn more bearish. At present, we're very bullish, but we're going over both sides of the coin, and because as day traders, we want to know what the market is suggesting if it makes each move, because as day traders, we can pretty much look to capitalize on whatever's going on each trading day. So those are pretty much the main zones. We're not really changing much. Just the market is now looking bullish, looking for pullbacks until at least we start to break down below really 966, where we then expect the correction to 940. And then if we're breaking down below 880, we can start to look for the further moves down, but really it's if we get below 792 that the market starts to look more bearish. Okay guys, that's pretty much everything for this week. So all that leaves me to say is, as always, I hope you found that helpful. I hope you all have a good trading week next week. I'm James Orr, and thank you.